Yeah. So major gap up last night. As everybody knows the news, we're in a possible 2 week ceasefire. It just happened. And you know what? We hope for the best, both for the American people and the Iranian people, and that maybe we can have this thing come to a resolution that's satisfactory to everybody. Guys, this is something that as a retail trader, it can make you crazy, if you're not already in the market and you get these extensive moves. So I'm going to give you some strategies today about how you can actually trade this. So hang in here with me and I'll give you some ideas about what we can do about this. We're looking at the SPY right now on a 4 hour time frame. Before I get started with that, I want to throw out that I met with Gorilla with Glasses, Don Fione, yesterday. What a great time we had. We spent 2 hours together. We were only supposed to spend about a little over an hour. I ended up missing my train and had to take a later train, but it was well worth it. And I could have spent the whole day. I have a passion for the stock market, and so does he. And I know you guys do as well. So what a great time that was spending time with Google with Google Gorilla with Glasses. All right, let's go ahead and let's get the show started here. So I drew this in yesterday, actually, this resistance zone right here, because it looked like we were consolidating through here. And I'm saying to myself, if we capture this, then where's our probable next target? Besides the 161 Fibonacci that I had drawn in, as you guys know, about a week ago, which we came up to pretty much and now have overcome that. So I'm going to take those off the chart. I wanted to leave them on because I think it's important for you to understand how to actually do these projections. I had shown you an ABC move out of a bullish falling wedge, right? And this was the first target, and this was the second target, and you can use Fibonacci's, to do that. So, um, let's go ahead and actually just go ahead and take it off right now because it actually has no relevance. It's only left it on basically for your edification. So, this. Move that drawing. There we go. Okay. So what you're looking at though is we're here in the SPY, and you see where we stayed in this terrible trading range from basically the beginning of December until really for the entire first quarter, almost to the very end of the third quarter. I mean the first quarter. So we are now at the bottom part of that trading range, as you can see, right? So here's price action, and here's the trading range right here. We're right there at the bottom part. We have captured this resistance zone that I marked off yesterday, so we are above the resistance zone, and that's bullish. All of this is absolutely bullish, as you know. The problem is that, how do you get into a market like this? It's a really great question. How the heck do you get into a market like this without, getting eaten up? And Alvaro, he's actually posted some really good posts this morning on Discord. So I'm going to steal a couple of his posts right now. Let's see here. Oh, here. Okay, so here was one of his posts, right here. He says, "Okay, guys, here's where the 20 DMA is at. Let's make sure that we pay attention to it. 657.10. And I'm not sure if we surpassed that or not. Let's see. Yeah, we're at six. Oh, that's an old post. All right, so we're way past the 20 DMA. All right, very good, very good. My mistake. All right, but then here's the post that I saw this morning that I thought were really fantastic. Okay, because we need a reminder. You don't want to get too far ahead of yourself and chase into the hole here, and then find yourself, getting actually used up as liquidity for these other traders. Uh, it's binary outcome. We're up 3%. Buying here is pretty much chasing 679 level. Oh, that's where it was. That 679 level coincides with the 100 DMA, right? So where are we at right now? We're right at 679. So thank you, Alvaro. We're coinciding with the 100 DMA. See if the bulls can take that out. Oil remains 95 bucks. That's still elevated. The VIX is still above 20. It's elevated volatility. It's really just telling you be careful. You know, don't just get FOMO. Don't go crazy. Don't jumping into this market. And so it's really easy to get FOMO even if you're an experienced trader. So we are in this area right here that is it's a balance range. So what that means is there's a lot of volume here that has accumulated over the course of those 3 months. There's people who are long over here who are going to be like, okay, finally I got to break even, I'm going to get out. Another thing I want to show to you guys, I talk about this a lot. I call this a reverse bear flag. I want you to look at this, the formation of these candles right here. We have our impulse move right here, major impulse move, right? And then from that impulse move, in fact, let me change the color to orange. I think it'd be better. From that impulse move, you now have a slow walk up like this. The best thing that you want to see if you want to get bullish is you want to see it actually doing this, right? You know, your bear flags, a lot of times they'll show them like this or pennants like that, right? So that is really exactly what you want to see. Why do you want to see that? Because when you're seeing that, actually the RSI is actually burning off, you know, it's actually burning off, and meanwhile price is pulling back at the same time. And it also gives you a great entry point because you know that once you break this right here, like this, then that, you can go long, right? So, but when you're kind of like continuing to move up like this, what's happening is, and I'm not going to show you this, you can look at it for yourself to see. I call this a reverse bear flag. What's happening is that your RSI spiked like this, right? And then what's happening is, as it's going through this part right here, your RSI is kind of doing like this. It's slowly coming down. But meanwhile, your price action is going up. That's called a divergence. And usually those things actually lead to pullbacks. And so you can kind of see one. Let's see here. Yeah, here's one right here. It's not as extreme as this one. This one here is a beautiful, what I call reverse bear flag. But you kind of see one like right here. If we take these two time frames right here, you had an impulse move, and then after that impulse move, you just had this like slow walk up. It wasn't nice and tight as like this one was, right? And then what did you get? You ended up getting that pull back right here, pull back here, and dropped all the way down to here, back to the middle of this regression channel. So I am actually looking today, I'm looking for the fade today, personally. I'm looking to see if this thing is going to fade back into the gap up. I'm looking for the first 1/3 to 1/2 of the gap to fade in. All right, that's my take on where we're at in regards to the SPY. It's a general overview. I want you guys to take a look at the dashboards real quick. And once again, as we're streaming here, I'll try to make sure that I'm checking into the chats to see what tickers it is that you want to look at. But let's go ahead and let's take a look at the dashboards that I have. I think there's some information in there that can be very helpful to you as well. So I set up my secondary monitor on a much higher resolution so that you can see the dashboards even clearer. And then once again, with the dashboards, you have price action in these areas right here, and it's by time frame. So on a 5-minute time frame, 15-minute, 1 hour, 4 hour, daily, and weekly, this is the price action that's happening within those time frames. So this is really beautiful that you can have something like this. And one of these days, I'm gonna actually put together a class showing you how you can actually build these things yourself. Okay, but as you can see, the winner right now is Bitcoin. Bitcoin's tearing it up. It's up in every single time frame, like major up, and it's actually recapturing the weekly time frame as well. So this is a major turnaround for Bitcoin. We should probably take a look at that chart. Also, the Russell, which is interest rate sensitive, you know, that's ripping up at 3.75%. The NASDAQ, you know, the Mag 7 stocks, they've been taking some heat, you know, this year. Looks like people are wanting to get into the NASDAQ. Gold as you know, gold is actually in a super cycle right now, and it's been in a pullback. So now all of a sudden people are wanting to get into it. And why? It's because interest rates in the dollar and all that's coming down, which I'm going to show you in the next chart. So basically everything is up, and look at oil. Oh my God, oil is down 14%, no, 17%, almost 20% down right now. This oil is down to $92 a barrel. let's go to the next. This one here is really important today. We got the bonds are actually up, which means interest rates down, high yields up, which means the high yield interest rates are down. And then your VIX is down 21%, comparatively speaking. It's still 20, which is what Alvaro was saying. It's still high. You know, there's going to be volatility, but the dollar is actually giving back a lot of gains. 1.2% is a major move on the dollar. These all set up very nicely for the market moving up into over the next few days. I think once again today you might end up at the open begin to see a little bit of a pullback, a relief rally where people are actually taking some profits, or some people are actually getting out because they got a chance to break even. Okay, ARKK, not a surprise. It's up almost 6%. It's having a pullback. This is a beautiful thing about my dashboard here, is I could see right now it's having a pullback in the 5, 15 minute, and even the 1 hour. So you could go over to this and say, well, it's strong in the 4 hour and the daily. Pull yourself a downward trend line, breaks the downward trend line, that might end up being a long. And I think that's it. All we have to go on that. So on the S&P sectors, once again, it's not surprising to see that everybody wants to get back into semis, and look at it. It's up 5%. It's up in every single time frame. It's the only, I call it a sector. It's not really considered a sector, but it's so important that I actually added it into the sectors. It's the only one that's up in every single time frame, if you can see that. So that's pretty amazing. I actually have a watch list specifically set up for the SMH, but you also got to pay attention here too to the XLK, XLY. These are usually big tech companies drive these areas as well. And it's interesting to me to see that the XLI is up. So one of those stocks I've been keeping an eye on for the longest time is Boeing. So it'll be interesting to see what's going on with Boeing. Now I put the SPY on this, even though SPY is not a sector, so I could see what ETF sectors are actually outperforming the SPY. So that's why that's up there. The live stream in case I get some comments. Uh, Watch list right here, I call the extended sectors. Your GLD is actually leading the way. You got copper. I don't like that. Let's see. All right. So there you go. Got GLD, GDX leading the way. And then you got copper and silver. Silver on the futures market, it seems to divert quite a bit from the ETF. Anyhow, the ETF is ripping at 6%. All of these guys are above 5% right here, 4 to 5% right here. SMH, TAN, that's TAN is your solar play. Bitcoin, XLK, XLY, IYT. That's and you got your home builders making a nice recovery bounce as well. So, and what's on, and since the list is a little long, let's see what's on the bottom of the pack. And of course, USO is on the bottom of the pack, and XOP and XLE. So basically your energy stocks. And then it's not surprising also to see your protectionist stocks are, not faring as well, right? Because this is basically a risk on market at this time. So let's go ahead and move this back to that, and let's take a look at your Mag 7s. Leading the way on the Mag 7s is Meta and Tesla. And so basically the theme here is the stocks have been beaten up the most are actually the ones that are recovering the hardest, and that's pretty typical. However, Google is actually not one that has been beaten up the most. And in fact, if you look at Google, it's got the highest weekly percentage gain of all the Mag 7 stocks, and yet it's hanging right there with Meta and Tesla. I've been saying for the longest time, Google will rule the world. And so when you get a chance to buy into Google, if you're looking for long-term investments, I think Google is a very, very safe play. So let's go on to continuing to review the market. This is so you guys get some ideas about things that you can trade, right? So looks like I need to expand this column here just a little bit because we got winners that are winning so much. All right. So these are percentage columns too, by the way. I don't put the percentages in there because I want to be able to sort the columns, and they're custom. I wrote these as customs. This comes with Thinkorswim. These are customs. All of this stuff over here that I did, that's all custom. And once again, I'll be putting together some things to show people how to do that. American Airlines and CCL. Guys, the airlines and the cruise lines have been really taking a hit, especially CCL, because CCL doesn't buy gas on, I forget what it's called, but like there's a way to buy gas where you can say, I'm going to buy it for the average price, and CCL just pays whatever the going rate is. So CCL is a huge gain right now, and so is AAL. I'm expecting, once again, so there's going to be profit taking. There's going to be people that are actually going and saying, okay, you know what? Shoot, I made like thousands of dollars overnight. Give me the money, because this market has been bouncing crazy. So who knows when the next tweet's going to come out that's going to rip the market down. And that's exactly the world we've been living in. So your memory stocks, MU, is up as well. BABA, so your China AI play is up, and we'll go with that. We don't need to do gap ups and gap downs. We already know what those are. The gap ups are obviously your all the things we've already talked about. Gap down are protection and energy. Okay, but we do want to take a look at this list right here that I call the AI list. And once again, it's your memory stocks. You got Hood. Hood's really taken a beating, and I still do believe it's in a 5-wave downtrend. But that fourth wave can be very exciting. So Hood looks pretty nice right here. It's up 8.5%. And once again, if you are going to get into these stocks, wait for them to pull back to like the 61.8. Wait for them to pull back to maybe the 945 to somewhere around 945 to 1015 time frame today before you buy. If they're pulling back, throw yourself down a downward trend line. When it breaks that downward trend line, probably retests around here and then goes up. That's your end right there, right? So, all right. Also, we got Dell up, AMD. Basically, what you're seeing with this is that every single AI stock is up, every single one. And so that's once again streaming risk on. Meta, AMD, and Oracle are leading the way on your jumbotron. Down on the bottom of the list, obviously, is XOM, who's been doing great with the energy play. And your protectionist stocks are kind of on the flat line upside. Netflix, which has actually been doing kind of well when you look at it, and it's actually up on the week slightly, where a lot of these stocks are. Well, anyhow, Netflix has been doing very well. It's at $100. It's up 1.65. It's not one of the ones that's ripping up. And in fact, I'll be continuing to look at Netflix. I've been getting in and out of Netflix for a while now. These are what I call my primary plays. SNDK, Bloom Energy. My God, guys, Bloom Energy. I think it's up 800% over the last year. And not this year, but last year it was up 800%, and it continues to really just have a great play. We got this one here too that I've been keeping an eye on, RCAT right here. That looks like it's having a great day, obviously. And uh, Coin I was talking about yesterday or day before yesterday. I'd love to get into that. Dash. Oh, well, don't let me forget to show you Dash. That is one that I actually got in a couple of days ago, so I'm very happy to see that that's up 4%. And then last one here that we're going to look at, the last watch list that is what I just call watch list, which has a whole bunch of things listed. And you can see AAL, CCL, Irene, Bloom Energy, Wolf, Fastly. I'm going over these so that if one of these things are one of the stocks that you like to trade, I'm letting you know these things are running, they're ripping, they're bullish. These are the ones that actually are making a difference right now. And then if you want to look at the bottom of the pack, come on, there we go. Bottom of the pack, USO, Devon Energy, Halliburton, Kroger, that's been a great protectionist play, Lockheed Martin. Uh, and then, you got your healthcare and some other protectionist stocks. All right, let's flip back over to the charts. You guys can go ahead and start putting in some ideas about things that you want to look at But I'm going to go ahead and change this now back over to my laptop screen so we can go ahead and take a look at the charts. We're going to begin with the SPY, and I'm going to go ahead and I'm going to add my indicators back in here because this is where um, I'm able to kind of show you guys the pivots and stuff like that. They automatically draw in for me, so it just makes it easy. All right, and let's go ahead and let's go ahead and turn it up a little bit larger so that you can see the numbers. All right, we are right now above every single moving average on this chart. The slopes are all positive except for the 200-day still has a slight slope down. The SMAs are all stacked on top of each other. That's the 5, the 10, the 20, and the 50. And I don't necessarily include the 200 in that stack. Um, and your pivots are this right now. We got this range right here, which is right at the 660 level, and you can see that's the top of this level right here. So that's pretty easy to see. We're testing this 675 level, and that 675 level, in addition, is also a pivot high, not a pivot high, but a snapback high. That's what that red arrow means. So. Um, and as I said, I would actually play this like this, looking for a break of that down to here, and then I'm looking for it to go up, you know. But this 2 week truce, by the way, guys, it's not necessarily set in stone. And I will remind you, we have numbers coming out today, and we got the big number coming out on Friday, which is CPI. And everybody's thinking that with the way that gas has affected the economy right now, it's going to it's not going to be pretty. So these things can reverse. Right now, the narrative is really in the positive side. But you guys know that the regular trading hour whales love to make the pre-market suffer. So that's another reason why you might want to be thinking that this is going to be looking like it's coming back into a pullback. Let's look at the 15-minute time frame. On the 15-minute time frame, we don't really have any pivots on this. I guess you could take this one right here, 680 as your next round number. It is coming right into this zone right here, which is exactly what you want to see if you want to try to get long on this. Um, and if you do want to get long on it, my suggestion is that you go like this. You pull yourself, even if it's just well, it's a wrong drawing tool. Pull yourself just a little tiny trend line right here. Okay. It breaks the trend line, then you get long. Set your stop loss underneath that recent low. And now you're at least being responsible if you're trying to chase this thing. And I do chase from time to time, but once again, the way I'll chase, if something's in a really strong uptrend, like see this bouncing up and down like this, that's not a way to chase. That's a regression channel if you want to do something with that. See, look at the pullback. It's already giving you some of that pullback. I'd rather see it continuing to go up like that, because once again, I really think you're going to see a movement coming back into these moving averages. I don't believe that we're above them all. So we're right there in the 50. The 50 is right here. It's right up there with it on the 15-minute time frame. On the hourly time frame, your 20 period moving average is here at 670. So 670, 671. If it comes down into that 20, my experience is a lot of times, even when it's actually going to continue up, is that it does like some pierce throughs. See right here? This probably isn't a great example, but at least it's an example. You see it pierces through. You don't buy as soon as it touches the 20. You buy after it pierces up and recaptures. Then you can buy, and you can set your stop loss underneath of the recent low and set your stop loss underneath here. You buy here, stop loss there. Got that? So I'm just trying to, once again, I'm trying to give you some ideas so that you're not going long into the hole on this and getting eaten up. Let's go ahead and let's take a look at um, some of these Mag 7 stocks. we know what they're looking like on a 4 hour time frame. So I'm actually just going to leave it here on the 15 minute, and we'll just try to get some ideas about what we're looking at. Uh, the uh, the The pivot low for Meta is 592.50. That's also matching up with the 20 period moving average, which is at 593.84. This is a $600 stock, so a $1 range doesn't mean anything. Looking for this thing to pull back into this. It does have the reverse bear flag. It also has a snapback. And actually, let's do this. Let's go ahead and let's turn on the lines on the snapback. So it's really clear what we're looking at. That's $600. It's a possibility you could come back into that $600 range. So what you're going to do on Meta, if you're wanting to get into it, say you want to get into Meta long, what you're going to want to do is you want to see how price action is lining up on this $600 range here. If it loses that $600, then your next spot is this 20 period moving average slash pivot high of 592.50. Okay. And I would not go long out the gate without a pullback. And pretty much that's my set. That's exactly my feeling on this as we move forward. So I'm not really going to be talking about upward moves other than the idea that it's pulling back and then you're going into an upward move. Okay. By the way, I mean, there's three scenarios, right? So scenario one, we can just rip and run. Okay. Scenario two, you're going to get a little bit of a fade, and that's the highest probability scenario when you gap up this much. So you get a little bit of a fade. Maybe it doesn't even go back a third into the gap. Maybe it only goes 25% into the gap. You're going to get a third of a third, 25% to a third, at least no more than a half of a gap fill. And then the other thing is it goes sideways and it just chops sideways until it makes a decision about what it wants to do. So I think the open is going to be very interesting. Probably your first move wouldn't surprise me to see your first move actually rip up, try to get some newly trapped longs, and then it fades. That's would not surprise me at all. Boy, if it rips up, mark that first 1 minute bar. It rips underneath that 1 minute bar. That's your fade. Let's go into Amazon. Amazon, same exact thing. We got ourselves a snapback high. It's over top of the snapback high. It's captured the 5 and the 10 moving average. We're putting in a couple of decision candles here. That's what I call dojis. It's where the battleground is happening over the course of the, what are we looking at on the hourly chart? On the hourly chart right here, we've had an impulse move followed by, it's not as bad as Meta. It's not as bad as Meta was in regards to that reverse bear flag. Did we actually look at Tesla? No, we did. I don't think we did look at Tesla. I can't remember. I'm going to do Tesla. Tesla's got the exact same thing. We got a snapback high. And this is going to be the scenario across all of it. It's retesting the snapback high. It had the reverse bear flag. It pulled back into it. So it maybe that's all you get out of that reverse bear flag, but um, it wouldn't surprise me to see it pull back here to the 357. But Tesla's a little bit different than the other ones, and the reason why is because Tesla's been beaten up. So I would be I'd be a little more I'd be a little more positive about Tesla continuing to do like a gap and go, whereas and Meta, I'm not positive about it because that is exactly what I look for in a reverse bear flag. And then Amazon's kind of mostly sideways, so that's not bad. That's not too bad. But I would like to see it get down to that 219, 220 area at least. And it wouldn't surprise me that it undercuts that and maybe gets right in between this as this 50 is pulling up, gets right in between here. Your breakout is 215. I don't think you're going to get down there on Amazon. Go into Google. Google's been it's a strong stock. A lot of people want to get into it like me. It's got a reverse bull flag. It has a snapback right here at 316. Your 20 period moving average is 313.50. Once again, I still see the same kind of a scenario for Google as I was talking about for Amazon. Probably pulls down into this range, and then from there maybe we can do something like that. That's kind of what I'm looking at. Uh, Nvidia, the one everybody loves to trade. Is it time to finally get in Nvidia? Guys, what is this? This is a reverse bull flag right here in Nvidia. So what are we looking for out of that? We're looking for it to pull back. And then if it's good, if the market's continuing to stay in a favorable sense in regards to this treaty, probably ends up pulling up. Your top of that range, that's a regression channel that I pulled. It's actually 182.50. I'm just rounding off to these numbers because you're gonna see some 10, 20 cents. You're not gonna hit a specific number right on the nose. 20-period moving average is right in that same spot. On Nvidia, it just really rips and roars. Wouldn't surprise me to see it move all the way back to 179 and then get some legs. So keep an eye out for that. Be careful with Nvidia. Microsoft, we know Microsoft's really had the heck beaten out of it. See here, it's in this downward channel, okay? But it's actually ended up having a nice impulse move. Now it's interesting to see this one. These patterns are all just slightly different, you know that, not all of them, but this one here has a rolling top, right? A rolling top, and those rolling tops, you know how those go. They usually go down. So we're looking at Microsoft around 380. If you want to get into it, you can see how price action is happening at 380, 376.5. Going down to, we already did the SPY, Apple, which was we had an options alert on Apple on our Discord. By the way, I wonder, is Alvaro out there today? Alvaro, you out there? If you are, post yeah in the chat. Anyhow, over here on at Apple, we're looking at that. That's the kind of bear flag that you actually look for. I mean, bull flag. You got a nice bull flag right here, and it's consolidating in a real nice tight range. This is a tradable stock here, guys, because it's going to bust out of this range in one direction or another. And you have all the people who are bearish right here, all these red candles, they're going to be wrong if it goes to the top. And the ones that are on the white candles, which are green, or most of you guys, I use white. But anyhow, these candles here, the white candles, they're going to be wrong if it rips down to the bottom. You got yourself some snapback on this as well. So you got a snapback right here, and it's been honoring that line from the get-go. It's moving up and down in between the 5 and the 10-period moving average. So your next play, if it actually pulls down lower, is 257.5. And then you also have the 256 area, which is part of the regression channel that I have drawn in there. So if you look at that, here's what that regression channel looks like. You can see it's been going on for quite a while. And it looks like that's so upper. We got ourselves a pivot on the upper. Sorry about that. My screen's going crazy here for a second, huh? All right, we do have a 262 target on the upside. So there's your targets if you want to trade Apple. Okay, Aisha, I got you covered, didn't I? Nvidia, Meta, and Microsoft. I already did them. Fantastic. SK 2026 asks a question. He says, "Can PCI and CPI affect the SPY today?" Um, is Let me look at this. I meant to actually go over that in the very first part of the call, was to take a look at this earnings for today, or not the earnings, but the things that are happening today. Today we got crude oil inventories. We got the 10-year note. That's one to pay attention to. And then we also got right around here the FOMC minutes at 2 o'clock. Right before 2 o'clock, wouldn't be surprised to see if you're in like a very low consolidation. So you might want to pay attention to that. For tomorrow, the big number, yeah, we got PCE. That's a big number. And GDP tomorrow as well. And the initial jobless claims. Initial jobless claims can mean something, but I don't think anybody actually believes anything that's coming out of initial jobless claims. This isn't just this administration. This has been going on even in the previous two administrations. And it just seems to be getting worse and worse. Like the only thing that matters on the claims and what are the revisions. Um, Nobody trusts the jobless claims anymore that I know of. I know I don't. I almost don't even pay attention to it anymore. It's ridiculous. You got the 30-year auction there on the bonds as far as this week as well. Yeah, can PCE affect it? Yeah, if it's looking like it's inflationary and it's looking like the Fed's going to actually raise interest rates instead of cut interest rates, that's a big deal. That's a very big deal. And we're not out of hot water yet, guys. Even this morning, JD Vance posted on or talked about the fact that this ceasefire is very fragile. I mean, we're all giddy and we're going long and risk on and everything else, and then all of a sudden you get a tweet that says, or you get news that comes out like, okay, the somebody broke the ceasefire, it's on again. What do you think is going to happen to the market? Oil's going to shoot back up. These stocks that everybody ripped into, they're going to get out as fast as they can. What rips up rips down. Like to be long in the market right now, you might want to hedge yourself if you decide that you want to get long, or you put on a leap and you don't look at it. It's not a bad idea to be long, honestly, over the long term. If you're talking about it over a year or two, you're probably going to end up making money. Let's look at this. This is the Friday. This is very important. Here's where we get the big numbers. So PCE is coming out. Let me get my arrow again, bigger. Okay, there we go. We'll use that one. Anyhow, PCE is coming out here at 8:30 on Friday. It's expected to be 3.0. Yes, these will affect, especially if there's a big divergence on this, it will affect the stock market. GDP, initial jobless claims, that's a big number once again. Oh, wrong day, wrong day. My mistake. Wonder why I'm looking at the same thing. CPI is coming out. CPI is the big one. It is a huge number for the Fed, and if we end up like ripping over CPI, it's already projected at 3.4%. We rip over that 3.4%, it's not going to be good. It will not be good. And that comes in at 8:30. And then you have your factory orders. This gives us an idea about, how is the economy doing. And other than that, that's about it. So, all right, looking over here at the list, guys, APLD chart, please. Yes, who is that? That's Pink Trades. Pink Trades. Okay, Pink Trades. Guys, you have anything else you want me to look at? We have 5 more minutes that I'm going to stay on here. You guys know I like to actually look at the multi-time frame, but there's no point in looking at multi-time frame right now because everything is ripped up. So we're sticking on with the hourly time frame at this time. APLD is in, although I actually, because this one's been a little beaten up, let's roll it out on a larger time frame. APLD is in a reverse bear flag condition. Okay, it's right now it's up on the market. It was one of the market leaders, if you remember, when we looked at the market leaders. I think it was the second or the first highest on my list of the watch list. But it's also in a reverse bear flag, so you can wait on this. All right, you can wait on this. This right here, that's your reverse bear flag. You can wait on this to come back to at least 2738. You also have right around there is the 20 period moving average is right at 27, and then you got two pivots at 26. And if you look at this, these labels are part of like the indicators that I write over at stockchartistry.com, which by the way you can get now. It's been now available on the market now for the last week, and thank you so much for the people who have already purchased. Thank you guys. So right here, you can see that it's stacked. the moving averages are stacked. That means if you lose the 5, you got the people who buy on the 10, they're going to come in. If you lose the 10, you got the people who buy on the 20. The 20 is really the big daddy of the moving averages, to tell you the truth. That is one to really pay attention to. Here's a play that I've been reading out of a book that really seems to play out very well. Look at this 20 period moving average, how it's moving right up to here. And then look at this area here that was formerly a resistance zone with this candle and this candle. And then it was actually a battle zone between these two candles, but then became a support zone right there off of the rest of these candles, and it comes down here and it's support again. The 20 period moving up. The guy that I can't forget the name, I'll get it to you another time, but he says coming into this, it's an excellent opportunity to buy. Looking for the 20 coming into a ceiling. He calls it a pinch move. So your 20 period moving average is actually pinching in to the upper resistance, formerly resistance, now support zone. So that is a great place for you to play. Let's look. The reason why I do want to look at this on a larger time frame, I just want to see what's up above, because I know this stock, I think, has been beaten down. Yeah, it has been beaten down quite a bit. So up above on this, on the daily, you have your 20 period moving average at 26, but then 27.5 is where you have your pivot. And then above that is 29.26. It's recaptured the 5 period moving average. Actually, let's take this to a 24 hours so we can capture what's going on in the pre-market as well. So it's recaptured that the 5 period moving average. On a recapture of the 5 period, I like to see a test right here going along with that wick right here. If this was regular trading hours, I would actually be interested to take a trade right here off of that 5 period moving average. And it's carrying the 5. As long as you carry that 5, you can continue to stay in that. What else we got? Anything else, guys? Got APLD. It's 843. I can do one more ticker if you want. All right. No, you know what? Actually, I wanted to show you one more ticker. I wanted to show you the one that I got into a few days ago, which was Dash. And I want to show you why I got into it. First of all, I was looking for a beaten down stock, and this stock used to be 300, and it's been beaten down 50%. So that's the first criteria I was looking for, because if the market decides to dump on me, I didn't want to get dumped too much lower than what's already going on. And I've noticed that these beaten down stocks, they're just not getting hit as hard as the stocks that were doing well. And then the other thing is, let's go ahead and let's just actually turn off the my indicators for a second. So the other thing is, it was in this bullish falling wedge, and it had this very nice candle. It hadn't even broken out yet, and I went ahead and I got into it. And then it came here to do a back test on that, a perfect back test. Of course, today we have now, it's the long piece. Guys, this is something you could feel comfortable about going on a swing long. If it ends up taking out this low and you're not comfortable holding the stock, then you could get out, underneath of this low with a little bit of a, somewhere maybe around the 137 area. But I think this is a stock that's possibly going to actually have herself a turnaround. One of the things that I like about it is it looks like it's already produced the ABC move. These things, when they have massive corrections like this, as from me talking about it, that it'll have an ABC move. It's pretty much done that. It could go all the way down to 128. And the way I got into this was by selling puts. So I'm comfortable with it even going a little lower. And then I would actually just sell additional puts into this because I do think that it's been beaten down enough. It's paid the price. It's time to go ahead and get back into the game. But if you look on this on the hourly time frame that we were looking at before, this one here is actually also setting up a very nice bullish flag. It's captured those moving averages. It's on top of the snapback, a nice pullback into the 160 area, and you might find yourself one. This one has room to run. Let me show you one more thing about this, and we'll be done. Okay. This is really in case you're actually wanting to do projections, right? The way that you actually do a projection on something like this, it's on the hourly. Let's change it to 4-hourly. All right, the way you do a projection on something like this, I use Fibonacci's, but I'm going to make it easy for you, okay? So just pull, what is the distance from there to there? And then you take that, and then you drag it to where the breakout is right here, and that's your projection right there, which coincides right here with that. right here. So basically it's the 200 to 205 areas and projection move on this for a full move. For a partial move, it's probably about 175, which we're trading at 100 and what are we at now? We're trading right around 165. It's a pretty nice move. So that's my gift for you guys for the day. Everybody have a great day. Make lots of money, and I will talk to you later.